Good morning, my sir.
We're back.
Yes, we are.
Tuesday morning.
How are you?
Good. Yeah, a little flustered. Had to run in. It's hard to get up this early. The difference between getting up at like 5-ish and getting up at 4-ish.
Would it be better if I called you at 3:30 and
So
just
hard.
kind of gave you like I'll get one of those books of like daily words of affirmation. I call you at 3:30 and give that to you.
Yeah, no, I'm good. I mean, thankfully, we're gearing up for. I was just looking at the calendar. There's a ton of stuff going on.
This is
week.
everything you want. You've got election uncertainty. Again, I don't know long term whoever they elect.
Mm-hmm.
And again, if the House and Senate are different, what they can actually materially affect and change will take time. But there will be a reaction.
Sure.
But we have GDP in the U.S. We've got a BOJ rate announcement. Bank of England. Now, their new Treasury Secretary is presenting her budget tomorrow morning.
Mm-hmm.
Now, remember last time we traded down to 105 in cable?
Mm-hmm.
That was when the old guys had presented their budget and it wasn't received very well.
Gotcha.
Am I saying that we're going back to 105? No, I have no idea. I think she will have learned from the lessons of the past not to necessarily
Sure.
do that. But will we see a little volatility in sterling tomorrow? Absolutely, around this in the morning. Yen, absolutely. Then we follow it up with Nonfarm payrolls at the end of the week. Again, I don't care what any of those numbers are. They're looking for less jobs. Sure, look for more. I don't care. Just make it different than what you're looking for. Then we'll get movement, and then we can actually trade.
And I'm pretty sure we have PCE inflation on Thursday
You're
as
right.
well. And we're actually at this weird point because if you boil down the central bank, Pete, they are really either trying to constrict the economy because inflation is too high, or they're trying to expand the economy because employment is not moving in the right direction. And so they're constantly looking at an inflation rate with a 2% target and an unemployment rate of around a 4% target. And right now is one of those weird transition periods between, all this growth and high inflation and the growth having come in a little bit and the potential for high unemployment, and maybe everybody obviously is always calling for a recession, but potential for the economy to contract a little bit more than they expected. And in that transition period between, growth and contraction, we're here. It's a weird time in that I don't know which number is more important than the other. Is inflation more important than employment to the market
Right.
in a week like this? Because we're going to get a healthy dose. I mean, PCE is the biggest number to the Fed in
Right.
terms of inflation, and Nonfarm on Friday is the biggest number to the Fed in terms of employment. What do you think is the bigger number on a week like this?
From again, both backward-looking numbers. So how predictive are they? How informed will they be, again, going into the November Fed decision?
Yeah, Fed decision next week.
This will be the last set of data that they can lean on basis their decision. So I would have to say a spike higher in PCE would be more
Gotcha.
disarming. But think about where bonds are right now. We're back down to the 117 spike lows we saw Sunday night. This morning, last month we spent the middle of most of the month, 123 to 125 in bonds. So bonds yields appreciably higher across the curve.
Of course.
Already taking into account a little bit that inflation number inflation may not be as soft as everybody thinks. So,
And here I'm just highlighting, this will be on Halloween Thursday morning. They're expecting 0.3%, previous 0.1%. And if you're looking at the year-over-year numbers, I'm sure it's the expectation is in line with.
So when you talk about numbers that stick, if this is flat or at 0.5, you'll see a market reaction, and that reaction could actually stick. What I mean is, it's just not going to be transitory. Non-farm payrolls tends to have a reaction to if the actual number is different than the estimate, but it doesn't. Oftentimes, that kind of reverts a little bit. So I think that probably longer term, medium term, short term, that PCE number has the impact to be a little bit more driving of longer term movements that may stick a little.
And let's take a look at really quickly the interest rate environment around this, because they actually have pretty much locked in a 25 basis point cut for next week. Now, if you have that inflation spike higher, Pete, to your point, if it's 0.1 or 0.2 or higher than expected in that PCE number, this might move a little bit in the direction of no cut for next week.
Right, but what will move is if you jump to December, that's going to move a lot.
Yeah, because the expectation here is still, it's not 50-50, but it's 70-30 between another cut
25,
or no cut in December. And so the spike higher inflation, everything would likely inch closer to less cuts than expected, and maybe some U.S. dollar strength.
That's where we're going with all this. Is okay. Yeah. So here's the context. Again, let's get back to the product set. What's it going to affect? And you're spot on. It will probably give us a stronger dollar. Now, be mindful that we're at 153 in the yen. We're 108 in sterling.
I mean, Aussie is right down at its lows as well.
Right.
Bring up this Aussie daily chart.
So will the dollar go stronger, which means these currencies trade lower? Well, they've already traded lower a little bit, too. Yeah. So will the initial reaction be lower? Yeah. Whether or not it sets is a different story. So it's the idea of these numbers impacting the market has a great amount to do with where the market is within its range. If we were up the high end of the range, we got a high inflation number, we could see a really dramatic move that sticks. Now we'll see a reflexive lower move if we get a higher inflation number. But how long it sticks, or do we have a little bit of bottoming? And we're going from a different point. So that's important context. Again, and weaving in, we want to be aware of these things because they will drive markets. But what do we take away from them in terms of tradable opportunity? It's a little bit of context.
Well, a couple of things, because of course the flip side of this scenario is inflation comes in line,
right? And
the market pretty much confirms there will be one cut in November and probably a cut in December, and maybe the U.S. dollar, maybe there's some dollar profit taking off of that because
Absolutely.
We are sitting there at these dollar highs for the last couple of months of trading in most pairs. Another piece, though, the second piece of this, given that PCE is Thursday at 7:30 Central Time, Nonfarm Friday at 7:30 Central Time, great potential for a zigzag effect here of one number says something, the other number tells you the opposite. The market's relatively unchanged, but maybe there were some big swings, which is, I mean, in my mind, great trade, given, our contrarian lean a lot of the time. But the number here for non-farms, Pete, expecting 123,000 versus last month they did double that.
Right.
Weird landscape here, and to your point,
the 254
a lot of mean reversion we've seen.
Off a 180 estimate.
That's right, and it was off of I think the month before was 159, but remember we had this low. Right. It was in I think July or August of just 89,000. So to your point, a lot of mean reversion in these numbers back and forth. So wouldn't be weird to see half of this previous number.
Right. So so the takeaway is we're in a very relatively low vol environment, especially for things like Euro. We're seeing these very small ranges. The only one above 100 pips, and it's not even quite above 100 pips, is dollar yen. So in this instance, be mindful of using those one standard deviation levels that we've created as trading ranges, that we're in a relatively compressed environment. I'd be a little bit more mindful that we could see a little bit of outsized move. So where that sometimes becomes a useful metric to set, okay, the market's moved, now I'm going to take the opposing view or use that to manage, I might give myself a little bit more elasticity going into these numbers.
And what if so we talked about how dollar yen has around 100 pip one standard deviation move right now on a daily basis, and so on a daily basis usually moves within a range of around 100 pips. And yesterday, for example, it went and kind of hit that boundary a couple of times. on some the Japanese news that was coming out. Euro dollar a little bit different in that standard deviation. I didn't catch your and Glenn's analysis, but I would imagine that this number is 35 pips. And so with that, is it 1.5 times? Because that still only gets. I mean, I would be in this environment. I would think 50 pips is a big move in euro dollar. I don't know if I'd be waiting for 75 or 100. Of course, you're gonna get your. Volatility mean reverts. Right now, volatility is low.
Right.
It'll come back high. How does it come back high? There will be some days of 100 pip plus moves in euro dollar. We haven't seen them, man. And so you have to trade the environment that you got.
Absolutely.
And so if the math is telling you right now 30 to 40 pips, okay, you want to throw on, I guess, and that's the question I would leave to you. Is it 1.2x? Is it 1.5x? Is it 2x?
Because it's so soft, I would, and again, I may miss the trade.
Yeah.
But I would go 1.5.
Okay.
At least.
Yeah.
I just don't think that what the market's giving you is awfully compressed. So I would go at least 60, if not 70 points. So
Gotcha.
I'm almost going closer to 2x.
Yeah.
Am I probably, and given what's going on, again, the wider you go, the greater probability of reversion, basis probabilities and math, but the more likely, the fewer outcomes you're going to have. So could you miss the pop and flop or the drop and bounce, whatever we call it? But you certainly could. But we'll have to, and here's the thing. Sometimes it's okay. There's nothing wrong in if the range is too tight. There's nothing wrong in trading that range and being aware that it's more compressed. That sets your expectations right. But around binary events, this may be one where you do widen out and maybe you miss the binary whip a little bit. And I think that given range extremes in Aussie and Kiwi and in yen, that's probably where my focus would be. But again, you can construct your own ideas around euro if you're a euro trader. Absolutely look at that in terms of opportunity. Because, I mean, we're off 4 big figures. It's a pretty big move.
Yeah. Here, the journey from 112 down to, trading right at 108.
And see, I don't know if this gets too nuanced. So the answer to your question here is, would I look at 107.50 if it's a bullish dollar, bearish euro number? Absolutely. So I'd look at that a little bit bigger than the traditional ones. To the upside, would I want to give myself more room before I'd lean into the sale? I would, just partially because of the direction of travel. We're at the low end of the range right now. So I'd be a little bit more inclined to give myself more room to the scalp on the upside.
And again, this is from a contrarian mindset here that, if you were looking at things from a contrarian standpoint, market's gone from 112 down to 108. And let's say the market stays at 108 going into either PCE or Nonfarm or whatever your number is. You'd be a little bit more reluctant to sell a 50 pip rally, given that this market has been hit for 400 pips in the last month or so of trading. However, buying, 30, 40, 50 pip sell off here through the lows, looking for a bounce back from a contrarian standpoint makes a little more sense. From a trend follower standpoint, the reverse is true, right? If you're looking to follow this trend, obviously bearish, maybe you're looking to sell a 20, 30, 40 pip sell off thinking that there's more room to run. You're quicker to sell than you are to buy a breakout here, given how bearish the chart is from a trend follower standpoint.
If you're a momentum guy, that is basically that has put everybody who's long to the challenge. You're down through the lows, and if you're a momentum, and there's no right or wrong answer to that. It's really the trading style that fits you.
Consistency.
And,
that's the answer.
That is the answer. You're absolutely right. Shall we wrap it up then, my friend?
Yeah, let's get out of here.
Let's wrap it up. We'll see you back here tomorrow. Have a great day.